Welcome. My name is Van Richards. I'm a chartered financial consultant. And today we're talking about a very special company called QuantumScape. And thank you for joining me if you got bumped out just a few minutes ago, but we had some technical difficulties that I'm hoping that we've gotten fixed. So we're going to go ahead and re-begin and start the daily stock analysis. Thank you for your patience for coming back to listen, because this is a very special presentation today. I think that you're going to get a lot from this because this is a different company than any other that I have reviewed before. Now, I want to remind you that part of what I do is I come to you every afternoon and I help to review stocks and talk to you about different stocks and opportunities that may be available, the pros and cons that exist. But in the mornings, I operate my business as a financial planning practice, which is called richardsfinancialplanning.com. And if you're frustrated with the way that you're saving money, the way that your investments are going, go over to richardsfinancialplanning.com. It may be exactly what you need. Look at the prosperous planning process. It'll help you a lot. So let's go ahead and begin into talking about this company, QuantumScape. Now, I'm going to set this up just a little bit differently than companies that I've talked about before, because this company has the possibility for losing money. All investments do. This one is a lot different. You're going to find out exactly what I mean as I go through this. So let's begin and talk about this company just a little bit more detailed. Today, it ended up 1.24%, and that really pales in comparison to what it's done over the past few days. It's up about 40% from the time that they did their technology show previously. It's up even more than that from its IPO. But if we look at what they do, they have the potential to make batteries which are so different than any other battery that's been created for an electric car. But the problem is they don't have any revenues and they don't have any products right now. But they have a whole lot of money, and they have a lot of people that are willing to invest money into the company. Now, don't ride the wave and get encouraged into something, though, that might not be right for you. We want to talk about the pros and cons of this company today. Yes, they are worth about $28 billion. And that's an interesting number because if we compare it, let's say, for example, if we compare this to Chrysler, Fiat Chrysler is worth a little bit over $30 billion, and they've got about 200,000 employees. This company is worth about $28 billion, and they've got about 200 employees. So there's a long way to go between where they are now and where they want to be. So let's take a little bit more look and see at how this is going to work and what you should be aware of. With any stock that I talk about, I don't care whether it's an IPO or they've been around for a century, you have to look at the stability, the earnings, and the competitiveness of those companies. Now, I've talked to you about this before, but if you're new today, I'm going to discuss with you an important factor with any company, and it's called the investment moat. The investment moat is the invisible barrier that is in between the company and their competitors. Now, I want you to think of this. This is a company that's called QuantumScape, and right now they're just mainly an idea. They do have some tangible developments which have gone on, and that's the big news that was in the technology show that they did on the 8th. But right now they have no product and they have no revenues. But of these 5 moat characteristics, which one do you think actually applies to QuantumScape? Watch this with me. Remember, it's that barrier that's between them and their competition. There it is, number 2, proprietary assets. Now, companies like Morningstar and even companies like Sanford Bernstein, who's the one analyst that did review this company, we're going to talk about it in just a little bit, they basically think that this company has no moat whatsoever. Now, I'm going to differ from them to some degree and say that that QuantumScape actually has a very narrow moat. Now, when I say narrow, I mean narrow, because there's nothing that's proven right now. But they do have over 200 patents. They have certain processes and intellectual property as well. And that's the biggest thing that's going for this company right now. They are well funded. One of the primary ratios in finance that we look at with a company to see if they're stable is going to be their current ratio. And what we do is we take a look at the company's current assets and their liabilities. Now remember, it's worth about $28 billion, but when we actually look at the assets, their current assets worth about $131 million, and that's much higher than their current liabilities, which is only about $21.9 million. So their ratio is about 5.96. And really, when we're talking about investments, a good current ratio is in between 2 and 1, and 5.96 is outstanding. Now, this is the trajectory that QuantumScape has mapped out that they're looking for going forward. And the whole idea is that they're just in the research and development still. They don't have a complete product that will run in a car on a commercial basis or be able to create it, but it's something that is a good possibility going forward. Now, what they're projecting is that they're going to have revenues in 2024 of about $14 million. Now look how that bumps all the way up over the next 4 years. It goes from 14 million to 6.439 billion. Let's hope they do that. Let's hope they do that. But let's look at the reasons for and against this company right now, because there's some big ones that are out there. Remember that possibilities, even though that there's great possibilities for this company and that they have a great possible future, there's no guarantees. Now, what people who are bullish on this, now I usually say analysts, and I take this information from analysts that I have reviewed, but this is not really the analyst that's talking. It's a lot of the research that I've done, and it's a lot of the financial reporters that have reported on this and what they're saying too. And from a bullish standpoint, this is a potential product that charges up to 80% capacity in less than 15 minutes. Now, that's a lot faster than actually the Tesla battery that's out there. Number two, it can retain more than 80% capacity in over 800 charging cycles. Now, what that means is that you can recharge this battery and it has the potential to run for about 240,000 driving miles. It also has driving ranges that are 80% greater than the standard lithium batteries. That means they last a lot longer. And a lot of this information I'm getting from the news. So remember to read the disclosure at the end of it, because I'm giving you the best information that I have, but there's no guarantee that it's going to be absolutely accurate. However, I think that it's pretty good. Now, we've talked about the capacity of it. We've talked about the driving range of it, and we're going to go on to one big reason that I have heard from a lot of people, and that is Bill Gates is investing in this, and VW was an early investor. And that's a good enough reason for me to put my money in this. But let me tell you, friends, from a bearish standpoint, that's exactly the reason that you don't want to invest in a company like this. Now, I'm not saying don't do it, but I'm saying don't invest in this because Bill Gates invested in this. Bill Gates invested into it early. He's worth over $100 billion. If he invested $1 billion and he lost it all, he's still a billionaire. VW is banking a lot on this in the development of their products and of their vehicles going forward. So this is a substantial commitment for them. But for saying that I'm going to invest in this because Bill Gates invested in it, I think that's not a good idea. Plus also remember this. Bill Gates is what's called a qualified investor. And a qualified investor, it's actually the way the laws work in the Securities and Exchange Commission in the United States. You have to have over $1 million to get inside of some of these private placements before they go public. And he was actually involved in this from an early standpoint when they were working with venture capital companies, a venture capital company. So you couldn't have invested in this when Bill Gates began investing in this anyhow, unless you had the net worth to go into it. And I don't know about you all, but there's not a lot of people out there that have a net worth of $1 million. All right. The other bearish aspect is, hey, they really just don't have a product that's usable right now, and they don't have any revenues. They have no expectation of product or revenue until 2024. And you're going to see at the very end when we talk about what the one analyst said about this company, then you'll see how it works. The other thing is that the product that they use, which is called lithium lanthanum zirconium oxide, or LLZO, my understanding is it's very expensive to create. Now, looking a little bit further, the manufacturing the process, from what I understand, is very complicated. Hopefully, QuantumScape can work that out. And then the results that they have from the lab test are just on a single layer cell. And what they need for an automobile is they need cells that are multiple layers, dozens of layers, and they haven't been able to produce that yet. That's what they're working toward. Now, the other thing is that they have to go from zero production to being able to produce batteries on a global scale. They need to be able to get the sources, the production, the shipping, everything to be able to compete. Now, when we look at what companies like Morningstar say about QuantumScape, Morningstar really hasn't dedicated an actual person, an analyst, to reviewing this company. So what they do is they have an algorithm that they've created that actually tells what they think the fair market value is. And actually, I think that it's come pretty close. Morningstar is saying the fair market value right now of QuantumScape is about $66.97 a share, closed today at a little bit more than that. Now, this is the one thing that I want you to pay very close attention to. There is one analyst, one out of the dozens and dozens of analysts that exist, that has issued an opinion on this. And I think it's just a very brief opinion. And this is a analyst from the Hong Kong office of Sanford Bernstein. And they basically said that they have a strong sell recommendation on this stock. And this is actually what the guy said. His name's Mark Newman. And this comes from a Barron's article that was published recently. He said that although we're positive on the battery opportunity, the team and the technology, and he's talking about QuantumScape, we believe, given the significant hurdles to commercialization, shares are overvalued, and they put a price on it of $28 a share. All right, now, you may be sitting out there, and I know there's a lot of you that are going to write in and go, you're crazy. This is the possibilities. That's why we're investing. And I know that's some of you out there, but there's some of you out there that may be looking at this like the lottery. Don't, sell your wedding ring to go invest in this stock. Don't invest anything in it more than you can actually lose. Now, I don't say that very often, and that's not meant as a derogatory statement toward the company, but in reality, this is a risky stock. It's grown significantly in the short time period that it's been in existence. If we go back to August, this is just of this year, it was at $9.90, and today it closed at $76 and some change. Wow, what kind of return is that? That's a 668% increase just since August. So when I said earlier that it's a possibility that this could have left the station, the train could have already left the station, this is what I'm meaning. But I'm going to qualify that on this one instance. I want to talk about it from this standpoint. Let's imagine that you would invested $1,000 in Apple in 1980. Do you know how much it'd be worth today? It'd be worth a little bit over $600,000. So that's really the possibility that we're looking at. Hey, I'm going to flip the coin over, though, and tell you this. You invest $1,000 in a stock like this today, and 5 or 10 years from now, it's worth zero. That's always the possibility too. So you have to determine if it's actually going to be something that you think would work well for your investment strategy. But let's take a little bit closer look at some of these things. There is competition that's out there. There are actually 4 companies that are actually creating lithium batteries right now. Now, they're not the kind that QuantumScape is purporting to be able to manufacture in the future. But this is one of the hurdles that QuantumScape actually will face. Most of their product is probably going to be geared towards going into VW. Now, unless you want to drive a VW, hopefully they might change over the years, or maybe QuantumScape has some sort of an agreement that they can sell their technology also to other manufacturers like Tesla. I don't know how that's going to work out. That's something that's in the future. But they have to compete with contemporary Apex technology, LG Chem, Samsung, and Panasonic. And these are all companies that already produce right now $35 billion worth of batteries. That's the market. Okay. So what's going on as far as like the markets go on this particular stock? I want to show you what the options market is doing, because that kind of gives people a little bit of an idea of what the sentiment is of Wall Street investors and how they're looking at this. So let me make this just a little bit bigger for you. What you're looking at here are calls. Now remember, if you're not very familiar what options are, a call is a contract to buy a stock. It's just the contract. It's not the stock itself. A call is an option to buy this particular stock, and that contract has a value. In this particular instance, these contracts to buy one share of QuantumScape, we're looking at it at $7.65, and most of those are being purchased around for the December 18th number, and they're being purchased for $75. That's the strike price. In other words, what it means is that people are buying the opportunity to buy this stock at 75. So if it had gone up, you would want to be able to buy it at 75. Or if it went down, you might want to be, if you own it, if you're long in it, and you own the stock, you may be thinking that you want to sell out of it, and you're going to exercise your option and sell it out at the higher price if it's gone lower. So the point I want to get at, though, is that most of the contracts right now that we're seeing are around $75. Let's say in between $70 and $80. We don't have any other analysts that are out there. Now, let's go a year from now and see what's happening. People are buying contracts right now. There's not a lot of them. There are 788 contracts at $75. So what that's telling me is that people are thinking, all right, I'm going to say that this is a fair market value of $75. And if it goes lower, then I'm going to exercise this to buy this stock at 75. Then I'm going to turn around and sell it and make the profit. On the other hand, if it goes up, let's say it goes to 80 or 90 or 100 or whatever the number is going to be, this is an option for people to buy into it and get into it at the $75 number. So hopefully that gives you an idea. I think that my point in communicating this to you is this, that I think that the fair market value of the stock right now is probably in the $70 to $75 range. It could be a lot lower. I don't think it's as low as Bernstein is saying at 28. Is there a possibility that it could go lower? Yes. Now, there's going to be some big drops and gains in this stock over the next years. And what do I mean by that? You're going to have times like on the 8th of this month when they had the technology show and all the news came out and the hype was there. And all of a sudden you saw the stock rush forward about 30 to 40% in value. You're going to see some volatility on that. Now, on the other hand, it could be like a drug stock. If something doesn't go right, or if their timetable gets pushed forward, that's going to be news that may make the stock fall. But whatever you're going to do in this particular stock, I think that the best way to play it, if you're going to invest in it, is think, all right, I'm going to invest what I could possibly lose, and I'm not going to touch this for 20 years. And hopefully that by 2028, they're going to get to that point that they're going to be having about $6 billion in revenue. We don't know. We'll have to wait and see. So that's the idea behind investing. There's no guarantees of the future, especially in stocks like this. Now, every day when I come back to you, I'm not going to talk about stocks like this all the time. Actually, tomorrow, I think we're going to be talking about a dividend stock. So the idea, though, is that I want to bring information to you that you may be able to use and will help you to decide if you want to take the risk that's possible on a stock like this. So let me know what your thoughts are. If you think that it's a stock worth buying, write into me on YouTube. If you've not subscribed before, go over and hit the subscribe button and come back again tomorrow. Be sure and watch also the disclosures at the very end, because even though I do try diligently to give you the best information that I can't guarantee that. So thanks a lot for joining me, and I will talk to you all tomorrow.